Welcome to another Elliott Wave Traders Classroom video lesson. This is Fabio, and in today's episode we will go through an example on post-triangle thrust. I want to share my thought process. How do we actually manage a position? How to manage expectations after a triangle has ended and the thrust has begun? So let's take this example. It's relevant to any market that you follow. I will continue to not weigh too much importance on the asset class. This is a currency pair. However, it could be any commodity, it could be a stock or a cryptocurrency. Doesn't really matter at the end of the day. For the educational purposes, we have a price chart. We're going to take it for granted that the rise from 59.90 is a double zigzag. This is the operative wave count that I'm working from the higher degree, which is step number one. Every one of you should always build context from the higher time frame, monthly, quarterly charts. Then you scale it down to weekly and the daily. I'm showing on the left-hand side the weekly time frame. Right-hand side you have the similar same time frame on the daily, and then we will drop it lower to the 4-hour in order to check and monitor the wave developments in real time. So my context is that I am following a double zigzag. The second zigzag is underway from 86.06, and I have an early stage post-triangle thrust here against 95.50. So we have on the daily here, you can see that the market arranged for a couple of months, like 9 months in a triangle. I was pretty convinced that was a triangle, so it played out nicely. And we were just anticipating the end of that triangle wave B. And it ended 95.50, rallying above the BD trend line. Was that confirmative bias that we usually want from the market to suggest that the thrust is underway. So we broke above the BD trend line. Immediately we extended the BD trend line, the AC, to the right and the left in order to measure the thrust target, the post-triangle thrust. So you extend, you get the widest part of the triangle, as you see from the dashed red line. You apply to the extreme of wave E, and you will get an upside target, which is oftentimes the minimum target following a triangle. So the post-triangle thrust should aim for at least that zone. And in this case, it comes in at 104.52. So that's going to be our first target, expected target, followed by the quality projection between C and A, which comes in 3 points higher, around at 107.12. The next thing we do is establish the corrective channel. So the AC channel, you take the parallel lines, and now we have a nice looking chart which can paint the picture for the upcoming subdivision. So we're expecting this market to trade in a motive fashion, either an impulse or a diagonal. In the book it's written that post-triangle thrusts are oftentimes impulsive structures. However, that they can also morph into diagonal. So you cannot rule out diagonals. They are a possibility. However, it should not be your first go-to, especially since our wave A here is labeled as a diagonal itself. So a leading diagonally wave A and an ending diagonal wave C is a rare occurrence, and it's a low probability combination to work with in real time. There is nothing wrong with it, but in real time we have to just assume that 95.50 post-triangle thrust is unfolding as an impulsive rally. So we have the break above the BD trend line, pullback looks like a 1-2 setup here, and we are starting the most beautiful subdivision, the third wave rally in wave C. So we have quite potential here. We were counting this market as 1-2, so it worked nicely. and also the end of wave 2. That was also not that difficult, even though this market just tested the low of the previous wave 4 and then rallied from there. And now we have a 1-2. So I've lowered the time frame. We have the 4-hour on the right hand side and the daily still on the left hand side, just to have visual on a higher time frame. What else do we do? So we have the third wave underway. We can establish another channel and also projection multiples for this wave 3. We expect wave 3 to extend up to 1618 projection multiple with wave A. And in this case, we have identified the target to be around the mid 102s. So that's going to be the next upside target for purple wave 3. Let me find the purple wave 3 here. Well, it's a bit too far, but anyways, that's going to be at 102.64. We can establish the base channel, and as you see, probably you are familiar with the channeling technique. Trading above in an impulsive manner above the upper boundary will be additional bullish evidence that a third wave is underway. If the market doesn't trade impulsively and continues to extend, then we have other options that this market can unfold into, and we will see that it wasn't that easy to continue to stick with this trade. But there is only one rule now. If you are in a position in a third wave, your protective stop is, of course, the end 1 pip below the low in wave 2. So we have the red line. That's our line in the sand. We will be wrong if this market is going to reverse below 98.90. Until then, it's simply a personal choice on how you handle your protective stops. If you are very confident that this is third wave and it will never travel back to 97.94, then this is going to be your new protective stop. I've done this multiple times, especially if I'm trading the shorter time frames, 4 hour, 1 hour, or even sometimes less. And I have been in a situation where this market has wicked me out of a position, and then it just continued back in the expected direction. So that happens. So it's either you're going to have a comfortable size in order not to adjust your primary stop, or you're going to have a higher size and you'll have to play with increasing your stops accordingly. So that's a personal choice, but from a wave standpoint, that's our line in the sand. Whatever happens above 98.90, we can be flexible. Another 1-2 can develop. So let's just go a few days ahead to see how this market unfolded or behaved. We want to see impulsive price action above the upper boundary of this channel in order to get this third wave locked in nicely. So far, we got another pullback here. It's not looking that nice. And I was trading and monitoring this in real time, and we want this third wave to trade above, but it's not. So we can have another 1-2, 1-2. However, the internals of the rise from 96.90 so far, they do not look in 5. They are clearly like 1 wave 2 combination. You can go here, and 3. So it's like ABC. What could be the other options? While still sticking with the red line here with the protective stop at 96.90. So the market continues to pull back, and we can pull back to the 618 retracement. That's fine, but I don't want to breach. I don't want price to break below the lower boundary of this channel. That's going to totally ruin the current expectation, and probably signal that the higher degree time frame is not that post-triangle thrust I've been looking for, maybe a diagonal or something else. But for now, we're still in the game, and let's just play forward a bit more. So we got a corrective pullback, and it's very difficult to count this as something impulsive. So I went back and adjusted the internals of the sequence from 95.50. It looks like a diagonal is unfolding here. So I did the adjustment when the market started rallying back. So that's going to be our 1, 2, 3, 4, 5. A larger wave 1 diagonal is underway. Also, this is something that, especially when you're working with higher degree count, we don't want to pick tops. It's a post-triangle thrust. Here we're picking the end of wave 5. So let me put the leading diagonal internals here. Wave 1, 2, 3, 4, and 5. And I don't like picking tops, but we have what we have at this stage. It looks like a rising wedge, overlapping manner, series of third waves. So initially I was counting this as a 1, 2, 3, 4 with an extended fifth wave, but it's not that easy. Like, I look at this choppiness, we can find some corrective patterns there. We have a WXY on this wave 2, ABC, ABC, ABC wave 5. Let's see. We got the leading diagonal in purple wave 1. So that is what we were expecting. And wave 2 should take prices back towards at least the low of the previous wave 4. So now our line in the sand has dropped from 96.90 to 95.50 because of this leading diagonal expectation. We get wave 2 pullback that must take prices back towards the area of the previous wave 4. This is a leading diagonal, not an ending diagonal, where we expect the pullback to be sharp, dramatic, swift, back to the origin. It's a leading diagonal still in the direction of the primary trend. The reason why is still wave 1, and why not the entirety of wave C? It's because we're very short of the target. We're expecting at least rally towards 104.52. So let's just see. We have wave, I think in this case we can favor that wave 1. We tried, okay, WXY there. We have wave 2 in place. The upper boundary of the prior channel still acted as resistance. That's not going to be useful anymore. We have the trend line. We can extend this 1, 2, 3, 1, 3 trend line and 2, 4. Breaking above the 2, 4 trend line is the sign that the diagonal has ended. That's why when we went with symbol ABC here, the pullback failed to take below the 2, 4 trend line. So that suggests that the pressure is still higher. Wave 5 was still underway. Now we have the wave 2 underway. We want to see near price action near the extreme of wave 4 in order to satisfy the downside expectations for this wave 2. And there we have a nice pullback. We can count this as ABCW, X, ABC done, Y. So could be that the wave 2 has ended, or a larger 1, 2, 3, 4, 5, A and B and C underway. Let's play forward. Trading back in an impulsive manner here above the 100 handle. That could be a sign that wave 2 has ended and we are rallying higher again in wave 3. So let's see, the market provided the final puke. That is what we need. We ran the stops. That's a very nice technical confirmation. We ran the stop, sharp rally back up. That's like 99% from me, from past experience, that wave 2 has put in a low. We're done, and now we just need price action back above the 2-4 trend, back inside, back above 100. We have another new setup to play with. We can adjust the internals here on the daily and the weekly. We can put the labels. We have a new target. The projections for wave 3 will probably be higher than the post-triangle thrust. So, but anyways, we will have the post-triangle thrust as our initial target, so we're not concerned that much with a 1618 multiple. Now, let's see, we have another tradable setup, another larger 1-2 setup, new line in the sand at 97.78. So if you are simply a positional trader, you're still in the trade. Nothing happened for you. You're still safe, even from the initial protective stop at 96.90. The market didn't take it out. Now from 95.50 we can raise back to 97.78. We have a 1-2 setup, so let's just play forward. Remember that it's a post-triangle thrust terminal move. We shouldn't be that aggressive here, and so far it's just playing very nicely. We have a rally up, and this is what I didn't like. We got a deep pullback, and putting another 1-2 there, it helps you to stick with the trend, and the trend is higher against 97.78. But we should be mindful and aware that stacking up series of 1s and 2s in wave C post-triangle thrust, it will ruin the proportions here. It will ruin the proportion between wave C and A, because if you have a third wave here that will extend that aggressively, we're going to rally past the 110 here. So that's quite an aggressive target. We have a new high in place at 104.97. We need a corrective pullback to establish against that high. Always looking for 618 here to hold in a 3-wave pullback, or the 50% 618 range to hold. And we have one. Can wave 3 be done? That was something that I remember. This was a few weeks, 2 or 3 weeks ago, or last month. I remember that maybe this could be all of wave 3, but wave 4 is quite limited, because we don't want wave 4 to overlap with the extreme of wave 1. So that's not a possibility to consider in real time at this juncture. I'm still in the trade. This is still bullish, 97.78. We just need this market to provide a 3-way pullback. Assuming you have not taken anything from this market, you're still keeping the entire position just because you want 107 or the post-triangle thrust. Maybe you want the post-triangle thrust. That's, for me also, that's the main target. So I need to stick to this interpretation and to this plan. So we'll see. Let's play forward. Okay, so we have a corrective pullback here in wave 2. That looks like it has ended at this local low, 99.92. We need to keep the focus higher here against 97.78. So this corrective pullback must end soon, and we must see this market trade above 102.75 as soon as possible. I noticed something that here on the daily, the spike up to 104.97 is not registered. Probably it's just a glitch at this juncture, but the post-triangle thrust is achieved. We have tested the 52. We went up to 97. So the post-triangle thrust is achieved. And if you had limit orders there, then your goal has been achieved, either for the entirety of the position or for 50% or 30% or whatever you have decided to scale out at that initial target. Now it's just a matter of completing this 5-wave sequence, post-triangle thrust in wave C from 95.50. And I've started to become worried about this series of 1s and 2s, as I don't like, as I said, to be that aggressive in a post-triangle thrust, as it is a terminal move. So we need to continue to see this price action trade above 104.97 as soon as possible to further validate the current expectations. We are counting this as a 1-2-1-2 to avoid labeling prematurely the expanding variety of a diagonal, which is also a possibility that we considered back at that time, this was also considered as an expanding diagonal. So this market under the expanding diagonal should remain above the 2-4 trend line. If this is wave 1, 2, 3, 4, then we must not see a breach of this 2-4 trend line. That was another considerable count at that time. So moving forward, we'll see how this played out, and we will come to today's price at June 17th to see how to best count this. So you can see that we're just rising in a slow fashion. We lack that impulsive breakout. We have approached the trend line here, so just put another 1, 2, 1, 2 there, and that's just not how I like to count this. Even though we are still with the uptrend, in the direction of the uptrend, this market is not breaking out, and you need to know the characteristics of each of the core patterns. And third wave, especially third of a third of a third, it should see a very steep, powerful breakout, something that is missing here. So just continuing stacking up ones and twos is not the right approach from experience. And what I did is consider wave 3 to have peaked, allowed for an overlap in wave 4 triangle here, A, B, C, T, E. So we are ending a triangle wave 4, and that is okay to have an overlap in the A position of the triangle. So that eliminates those multiple ones and twos, keeps the expectations still higher but reasonably bullish. One final higher high above 104.97. Maybe we can get another thrust. So we have here another post-triangle thrust in wave 4 at a lower degree, wave A, B, and C here. So we have small waves C, D, and E, and we have an AC trend line. I'm expecting wave E to end soon without violating 102.61. If we violate 102.61, we will consider that this wave C is still falling as a double zigzag. So that's how I approach this market from the early stages of the post-triangle thrust, expecting it to reach at least the minimum target, which was the thrust measurement at 104.52. We achieved the thrust measurement on a fast spike. So if you had orders there waiting, the trade was successfully achieved and done. If you had part of the trade, you still survived and had time to take money out or still remain in the trade with a new key level and just wait for another higher high. We have a lower degree post-triangle thrust. So what do? We measure again. We extend the trend lines. And something I forgot to mention is from the initial extended trend line, we come to an apex, the zone where it often coincides with a turn in prices. So will that actually be the end of the post-triangle thrust and the entire higher degree pattern? Time will tell, but we are past the apex. It was around June 6th or 7th, and there we are now. You can see here from the daily that we are just consolidating there. So we'll see if we're gonna achieve the second apex, which comes in around beginning of July 1st. Let's try to identify the date here. It's not that accurate, but we have to use this. So July 1st or end of June, we have another possible target timeline wise for the entire higher degree double zigzag to end. So there we have it. This is how I have managed to engage and think within this post-triangle thrust, remain flexible, consider options based on their probability, personality, by using channeling, Fibonacci ratios, Mostly these two are very important when it comes to making trading decisions with the wave principle. So we will wrap it up here. For any questions that might have come during you watching this video, do not hesitate to send us an email or a voicemail. Until the next video lesson, thank you for watching and have a great one.